For this video, I wanted to go over briefly the IRS Form 2848, which is a power of attorney form filed with the IRS. So a taxpayer, either an individual or an entity or a trust, might file this form with the IRS if they are trying to grant authority to another individual or individuals the ability to be able to view information in the IRS database on the taxpayer, receive that information, or represent that person or entity in front of the IRS pursuant to an audit or another type of examination. So the form is only 2 pages long. There's just a few parts here that are relevant. So I want to go through the different sections, so what information is going to be required, what information might be optional depending on your circumstances. So the first section, pretty straightforward here, right? Taxpayer name and address. If this is an individual, you want to put the full legal name of the individual, the address where that individual resides, and then their taxpayer ID number. So if this is an individual, you're going to have their social security number or their ITIN here. If this is an entity, it'll be the 9-digit EIN, or if it's a trust, you'll have an EIN as well, right? So the daytime telephone number, always put a contact number for the taxpayer. And then the plan number, if applicable, this is generally blank unless you're filing this for some type of employee benefit plan trust. So employee benefit plans, remember, they're separate trusts that are set up on behalf of the employees. So they have their own EIN, they have their own tax filings, and then you have a plan number assigned. So if you're filling this out for one of those types of trusts, then you would have a plan number. But if it's just an individual or an entity, this is just going to be blank, right? So section 2 for the representatives, you have a list of each representative that's assigned to the file, right? So in this case, John is appointing Jane Smith, who is his CPA, to represent him in front of the IRS and be able to access his confidential information that's within the IRS's system. So you can list multiple persons, right? So each one gets their own box here. So we have Jane Smith, her contact address in Florida, where she's a CPA, and then more information on Jane regarding her CAF number, PTIN. So PTIN is the pay preparer ID number that's assigned to those that are preparing tax returns, filing returns, signing them. So that's Jane's PTIN. And then the CAF number, this is a number that's assigned to individuals that have filed 2848s in the past. So it's a unique number that's in the system, and it identifies more precisely the authorized representative on the account. If you're a CPA or an attorney or an EA and you're filing the very first 2848, you won't have a CAF number. So this will be blank, but once your first one is filed, they will assign you a CAF number, and then you'll get that in the mail. Now, once you have that CAF number, obviously you want to continue using that going forward on any other 2848 that you're going to be filing for different taxpayers. So Jane already had hers assigned, so she's got it listed there. Now, the box here, check if to be sent copies of notices and communications. This is always highly recommended to have at least one of the representatives receive these notices. So effectively what this is going to do is anytime John receives any kind of mail correspondence from the IRS, so if it's a tax notice or an amount due or something like that, Jane, as the representative, will be CC'd on all those notices. So she will get a copy of the same notice in the mail. Now, part of the reason why that's so important is obviously Jane wants to be up to speed on anything that John is getting as she is representing him. But we also have a lot of circumstances where taxpayers are traveling a lot, or they maybe live abroad, and so they have a foreign address where it's really tough to get mail. And so it's always really, really good if you have just a second person that's getting copies of those notices to make sure that, well, if anything is kind of lost in the mail, or if you have a taxpayer that is not home a lot and they're not regularly checking their mail, at least another person, such as your CPA or tax attorney or EA or any other individual, is going to get copies of those notices, so they're aware of anything that the IRS is sending over to you. Okay, so in section 3 here, acts authorized. So in section 3, we want to be as precise as possible as to the purpose of filing the 2848 and what elements we are allowing the representative to be able to speak to the IRS about, to receive information from the IRS. And so in this context, Jane is filing this for John because she wants to gather information from the IRS database regarding his income tax matters, right? So we have income tax, and as an individual, John files Form 1040s, right? And you'll notice here in the description they have a bunch of options, right? So if this was a business, for example, and you were filing this to perhaps deal with a payroll matter, so Forms 941, 940, W-2s, you can enter payroll as a payroll matter, and then the relevant tax forms related to their payroll, right? And they do give you 3 line items here, so you can list multiple matters that the agent or your CPA, attorney, whomever is authorized to be able to gather information about. Now, for the years or periods, this can go back as many years as you want. So we're doing 2019 to 2022, but you could do, let's say, 2010 to 2022. So there's no limit to how far you can go back, but there is a limit as to how far you can go forward. So when you file the 2848, you cannot go more than 3 years into the future, right? Based on the year that you're filing the form. So I couldn't put 2019 to 2050, right? I can't go 30 years in the future. It's no more than 3. So if you want to get one filed and have it be effectively on a rolling basis for a few years, you can do that, but you can't go beyond 3. The IRS will not allow that. Now, if we scroll down here, so sections 4 and 5A. So line 4, specific use not recorded on the CAF system. So generally speaking, when you file this, what you're doing is you're granting the person the ability to kind of look at all of these matters for these years listed here in line 3, right? Now, you can file a 2848 for truly just a one-off event. So an example, if you check box 4 here, an example of a one-off event would be you hired a tax person to represent you during a private letter ruling, or there's a corporate dissolution, or maybe an EIN application. So it's a very one-off type of circumstance and event. And then as soon as that task is completed or it's closed, then the POA terminates, right? So that would be the purpose of completing this box 4 check mark and filing it pursuant to that reason. Now, on line 5A, additional acts authorized. Also remember, when you're filing this, you are granting the person to be able to access your information in the system, but it is still limited. And so it's limited in that if you want them to be able to do any one of these items down here, you're going to have to specifically grant them additional access by checking the box and describing the circumstances for why you want them to do that. So, for example, accessing IRS records via an intermediate service provider. When you file this 2848, what you're doing is you're allowing the tax representative to contact the IRS directly and get the information, either over the phone with an agent or through the IRS's e-services portal for tax preparers or tax professionals. You do not automatically grant them access to use an intermediate service provider. So there are third-party companies out there. You can hire them, and they will basically do this on your behalf. And the IRS says, well, if you want to be able to use that third-party route, the taxpayer has to specifically grant the representative the ability to do that. So you would check this box here. Also, substituting representatives. Remember, the taxpayer is the one that is appointing you as the representative. Once you're a representative, you can't add new people without their consent, unless the taxpayer consents to that. So if the taxpayer wants to grant, so let's say if John wanted to grant Jane the ability to have Jane just add new people down here as she pleased, John would have to specifically consent to that, right? So he would have to grant Jane the ability to substitute or add representatives. Now, signing a return is another big one. Taxpayers must sign their own tax returns, absent very limited circumstances. So Generally, if you're injured or if you're continually outside the U.S. and you don't have the ability to sign your return, you can grant an individual the ability to sign a return on your behalf. Okay, so let's move on to page 2 here. Let's look. Okay, so the very top one here, specific acts that are not authorized. So line 5B can be completed if you want to remove something that the representative would have the authority to do just under this general POA. So for example, up here, if you wanted whatever would be included within the scope of box 3 here, so the income tax Form 1040 for these years, if for some reason you wanted to kind of scale back the scope of what the taxpayer's representative could do on behalf of the taxpayer, then you can list that restriction here in section B. But generally speaking, this is going to be left blank, right? Now, line 6 is very, very important, right? So generally, when you file a 2848 that covers, these specific acts that you're authorized to represent the taxpayer, so description of matters, tax form numbers, years. When you file a new 2848, it revokes all those prior POAs. So, for example, if let's say John was previously using a different CPA, so he had, let's say Frank was his CPA last year, and John and Frank had a POA on file, and then John switched CPAs, and now he's with Jane. Once Jane files this POA, it's going to revoke the POA that's already on file with Frank. Okay. Now, generally, a lot of times that's what you want, right? If you switch providers, you want the prior ones to be superseded and just completely revoked. But in limited cases where you have a POA on file and you do not want to revoke that existing one, you want it to remain in effect, then you would check this box and then attach the power of attorney that you want to remain in effect. So most commonly where I see this happen is when you have a POA on file for a taxpayer with their CPA, so their accounting firm, and then they have a tax attorney, so they have a law firm that's representing them with a different matter. So in order to make sure that both the law firm and the CPA firm aren't overriding their POAs, the subsequent POA that's filed should attach the existing one that's already on file with the IRS, so that so both the CPA firm and the law firm have a POA that's valid and on file, and we haven't inadvertently revoked access for the other party. Now in part 7 here, this is where we get the signatures for the taxpayer. So if it's an individual taxpayer, you're going to print taxpayer's name there, sign it, and date it. If this is a POA that's filed for a company, then the company is going to have to enter their information as well. So print the name of taxpayer from line 1 if other than an individual, so that would be the entity's name. And you would still have an individual's name that's going to sign this, right? So let's say it's a CEO. So you would have the company name here, in this bottom right line item here, the CEO's name, CEO's signature, the date that the CEO signs the POA, and then their title, right? So CEO or Chief Executive Officer, whatever would be appropriate. Now in part 2, declaration of representative. So this is where we provide, again, more information on who is going to be the representative that's assigned here, and the signature of the representative. So you can see a bunch of options here. So if you have, so Jane in this case is a CPA. So you see here, section B or line item B, certified public accountant, active license to practice in a jurisdiction shown below. So Jane is a CPA, so she puts B in Florida, and then she puts down her CPA license, signs, and then dates it. Now, if you read through this, you'll notice that you don't have to be an attorney or a CPA or an EA to file this form, right? You can file a POA as an officer. You can file a POA as a family member, right? So if you're a family member and you're the one that's going to try to call the IRS to get information on, your family member's tax account, your family member can file this 2848 to grant you that authority, right? So you don't have to be let's say a quote tax professional, attorney, CPA to get one of these filed. But you want to be very careful to complete this as appropriately as possible, because you don't want the IRS to reject the POA because you didn't follow all the rules. Okay, and so again, so after that is all done and filed, after that's all completed, you want to print it and have everybody sign and date, and then this can be sent to the IRS through a number of different ways. So you can fax this to the IRS, you can print it out and mail it to the IRS, and the IRS just recently implemented an online system where these can be uploaded. So if you're a tax professional and you have an e-services account, so you're an attorney or CPA or EA, you can actually upload these via a secure portal now. So you don't have to send them in via fax or mail anymore, which is quite nice, because very often a lot of these things would get kind of stuck in limbo and they wouldn't process them on a timely basis. But yeah, okay, so that covers it for this video. I hope that was helpful. If you have any questions, obviously feel free to leave me a comment below, and I look forward to seeing you again on the next video. Thank you.